Ever wonder how a home sticker price becomes the final check at closing? Well, let's demystify the math. It might seem complex, but it's really a puzzle we can solve together. Okay, let's dive in.
We're going to follow the money, looking at it from both the buyer's and the seller's side. It all starts with one number, the purchase price. For the buyer, that's their biggest debit. And for the seller, well, that same price is the main credit, the money they're getting. The buyer's down payment is simply the cash part of the price they pay right up front. Now, here's a common exam trap, confusing these three very different cash items from the buyer.
Okay, let's switch gears and look at the buyer's monthly payment.
This is called PITI. It stands for principal, interest, taxes, and insurance. The key is to turn annual taxes and insurance into monthly figures before you add everything up. And trust me, forgetting to divide by 12 is one of the biggest mistakes people make. So let's get to the big one, the buyer's cash to close, the final check they write. It's just what they owe minus anything they've already paid or been credited for. Simple as that. All right, let's flip the coin and see what the math looks like for the seller. For them, it's all about the net to seller, the final amount of cash they walk away with. It's the sales price, minus all their expenses, like the agent's commission and their mortgage payoff. Now here's a classic exam problem, working backward to figure out the needed sales price. The trick is to divide the net amount the seller wants by the percentage they actually get to keep. So, how do we make sure everything balances out and is fair for both sides? This table shows the double entry system. You've got debits, which are costs, and credits, which is money in. And that brings us to prorations. This is how we fairly split costs, like property taxes. The key thing to know is if an expense was paid in advance or if it's going to be paid in arrears. Another tricky calculation is the transfer tax, which is based on units of value, not just the price.
And here's the rule you can't forget. You must always round up to the next full unit. Understanding this flow isn't just about passing an exam. It's about knowing how real estate deals actually work.